Welcome to another stage analysis video. It's Wednesday the 24th of January 2024. Just going to do a brief midweek update. I'm starting with the major indexes. Going to look at the S&P 500 first. We've moved higher a little bit over the last few days. Only less than 1% overall. We have touched the +3 ATR level today, so we saw a lot of reversals today in the market as stocks that have been got a little bit extended in the short term started to show a little bit of weakness in the near term here, but major index continues to push up into the upper realms of its normal range here. You can see generally the 3 ATR level can sometimes be a short term turning point, but often we can see stronger runs as it moves higher up there. So we're still in a strong position, well above what we consider a short-term uptrend. So anything above the +1 ATR level here is what we consider a short-term uptrend. So it's still trending higher. Nothing unusual about that. You can see the breadth continues to deteriorate, making higher lower highs as it starts to roll over here. In the short-term moving average breadth, we've got 52% of stocks above their 20-day moving average at the moment, which is a very even level. So which actually looks a little bit divergent to what we're seeing in the S&P 500 major index here. So if we look at the equal weighted index by comparison, you can see that there's a bit of a difference there. So we flick back to the normal index and then come back to the equal weighted. You can see we're actually making a lower high here at the moment compared to a significantly higher high on the major index. So a bit of a divergence going on with the large caps, mega caps outperforming again in the near term, like we saw through a lot of 2023. So it doesn't necessarily mean anything bad, it's just some rotation at the moment. But if we do start to break down back below the short-term moving average here, the 21-day on the equal weighted, then it might be of concern. You can see we've got 69.8% of stocks in the S&P 500 above their 200-day moving average at the moment. So still a very healthy position. We tend to look for, we start to break below the 70% level on the 200-day MA one. That's considered a potential warning sign there, so something to look out for as we start to get back towards that level. But a healthy position for stocks is when we're above that 60% level. When we're between the 40 and 60 zone, we're in a more neutral area. So still very healthy from a longer term perspective here, and on the short term sitting just above that 21-day moving average. So the 52% of stocks above their 20-day EMA here at the bottom of the chart here, it makes sense compared to what you're seeing in the equal weighted chart, but obviously doesn't make sense compared to what we're seeing on the actual main chart as it pushes higher towards its 3 ATR level. So good move still since that October low. We've had a almost 20% move off of the low, so still in a strong position at the moment. If we look at the FANG index, I just wanted to show this to give a comparison. So what's going on at the moment. So again, these large caps have been continuing to outperform in the near term, so pushing out to new highs, while we're seeing, go back to the S&P 500 equal weighted chart, the opposite there, whereas it's consolidating over the last month or so. So what are the FANGs? So this is the NYSE FANG index components, which, as it says here, 10 highly liquid stocks that represent industry leaders across today's tech internet media companies. So we've got Nvidia, Meta, Broadcom, Alphabet, Microsoft, Amazon, Snowflake, I was surprised by that one, Netflix, Apple and Tesla. Tesla down in the after hours at the moment on earnings results tonight, so taking a bit of a hit. I think it was down 6 or 7% last time of looking, breaking around the 195 area, so it's close to potentially rolling over and could turn to stage 4 if it does break down. So that one of these is the only major laggard. The rest of these are actually pushing higher. New highs for Nvidia in stage 2, Meta in stage 2, Broadcom pretty sure is pushing to new highs in stage 2, Alphabet, Microsoft stage 2, Amazon's in stage 2, Snowflake also, Netflix definitely had strong earnings pushing out, and Apple is the other one that's a bit of a laggard still but has been recovering. It's more likely sort of stage 3, potential for stage 2 continuation area. So the majority of these in strong stage 2 positions, it's It's Apple and Tesla that are the laggards at the moment as such. But if we go back to that, you can see the combined of this. It's had a really strong move over since the October low there, actually pushing up over 30% compared to the S&P 500's just under 20% there. If we move on next to the Nasdaq 100 by comparison, so you can see this also has had a good move over the last 3 months or so, 25% or so there since it bottomed at the end of October. So I've been moving up strongly, mostly above the 21-day moving average. We've only that pullback at the start of the year there, which quickly shook out and reversed back above that 180R level again. So it's back in a short-term uptrend position in stage 2 following the continuation move. So back in November time. So at the moment, a little bit higher than the S&P 500. It gapped above its 380R level today, pull back in a little bit, so it's up just over 1% or so on the week to date basis, and still 76% of stocks above their 20-day moving average at the moment, so still in the upper zone after this recent pullback. So still healthy at the moment, but clearly a little bit extended in the short term, so it may need to consolidate a little bit. Again, if you look back at previous times where it's got a little bit extended in the near term, have had blocks where it's started to pull back in again, but doesn't necessarily mean that it's not going to continue higher from that point. It just means that it might do it at a slower pace. So if we look at the equal weighted chart of this by example again, so if we flick between the two, you can see there's actually not a lot of difference between the Nasdaq and the equal weighted chart. So if we do a percentage move there, what it's had, so 23%, so it's actually been moving very similarly to what we've seen in the Nasdaq 100 index itself. So a bit further back in here than the Nasdaq in the near terms, back around its 280R level there after opening above the 380R level and pulling back in today. So still in a strong uptrend position in stage 2 since making a continuation breakout back here in November and pushing higher. So 79% of the Nasdaq 100 stocks are above their 200-day moving average at the moment. So I haven't done the SART scores for these today, but yesterday we were looking at the percentage of stocks in a technically healthy position. They got a SART score of 6 or above, so that's the stage analysis technical attribute score, which basically means they're generally in stage 2, a correction in stage 2, or they might be in a stronger position in stage 1 or in a stronger position in stage 3, but they won't be in stage 4 with those kind of scores. So generally, with a 6 or above on the SATA score, between a 6 and a 10 is considered technically healthy, and hence we've got 76% of stocks as of yesterday that were in a technically healthy position. So similar to what we're seeing here with the 79% of stocks above their 200-day moving average at the moment. So as I said, the equal weight looking fairly similar to what we're seeing still in stage 2, but again a little bit extended in the short term, but has pulled back in a little bit more. So as long as it stays above that 180R level and rising 21-day moving average, any kind of pullbacks, then it's still in good shape there. Same with the Nasdaq Composite, gapped above the 380R level today and pulled back in a little bit. So we've only got 48.34% of stocks above their 20-day moving average in the Nasdaq Composite. So a very neutral position at the moment, in the middle of the range, as this pushes up towards the highs. So NYSE, on the other hand, actually hasn't made new highs since the start of the year here. So made a new high right at the end of 2023, and since then it's attempted to push back up to those levels, but hasn't quite got there yet. So let's have a look at that. So 16,933.62, 16,923. So 10 off of it today. So it did push up towards it today, but squatted back down on reversal. So we're still in a reasonable position above its 21-day moving average here. So similar to what we're seeing in the S&P 500 equal weighted chart here, got 45.96% of stocks above their 20-day moving average. So again, very neutral position for the moving average breadth, for the short-term moving average breadth. And the index itself is still holding in a neutral position at the moment, above a strongly rising 50-day moving average. So still in stage 2 at the moment, started to pull back into stage 2 after breaking back out through here. This big double bottom breakout from the October lows, spring type action pushing up. So again, still in a healthy position unless it starts breaking below this structure here, starts to come back down and then starts to push through the 50-day moving average. It's still in a good strong position at the moment. Russell 2000 on the other hand, a little bit weaker, again still above its 21-day moving average. Big reversal bar today, minus 0.82%, 51.5% of stocks above their 20-day moving average. So again, very neutral position for the short-term moving average breadth. Still in early stage 2, had a failed breakout back in July and into August and rolled over, then shook out in, started to shake out through the end of October there, made a shakeout and a test, started to push through, sign of strength, and then pushed up. We had a new stage 2 breakout attempt, started to push above the old resistance, but has come back in again. So still above a rising 50-day moving average, still just above its 21-day moving average here. So again, very neutral position at the moment for this. 51.5% of stocks above their 20-day moving average. So at the moment, hasn't done anything majorly wrong here, but still remains the laggard versus the rest of the indexes. If it starts to break that 50-day, then that would be of concern. But at the moment, still very neutral position for this. ARK, on the other hand, has started to come off a bit here. It's below its minus 180R level today with today's close. So we've got what we consider a short-term downtrend developing in ARK here. We've had a few breaks below that minus 180R level. So again, as I said, when they're above the plus 180R level here, roughly drawn there, you're in that short-term uptrend. You're in the neutral zone when you're between them. So it's been moving between short-term downtrend and the neutral zone. So hence it's in a short-term downtrend at the moment. It's pulled back a fair bit off of the high here now. So it's off 15% from the recent high after a big move up off of the October low. So 61%. So if we just quickly annotate this, you can see the Fibonacci level on this roughly. So still in a reasonable position, 38.2% area there, 61.8, whichever way you flip it, whichever coming from, it's pulled back into the normal pullback area. If it starts pushing below the 50% area, that's where it would be much more concerning. But again, at the moment, it's still within normal ranges, but it is in a short-term downtrend, and you can see the Mansfield relative strength has started to break back below the zero line again. So you can see we broke above in the mid part of November here, so it started to track out through this area here, and now it's started to roll over and break back down again. So outperformed for a while, it's been underperforming, and is now starting to underperform on a 52-week basis again there. So much more volatility in the ARKK, but you can obviously get a lot more leverage out of this one than the major indexes when you do get those short-term uptrends develop. So IPO, very similar, tracks the various IPO stocks. So again, the short-term uptrend was strong. We had this big break here. Now it's turned into a short-term downtrend. So very, very similar picture to what we're seeing with the ARK, broken below Mansfield relative strength zero line here again. So we'll look at it quickly on a weekly. Technically, still in stage 2. So did break out into stage 2, rolled over and then recovered into stage 2. So it's right on the borderline. So if it does start breaking back below that, then the stage 2 would fail. But if it can pull back off from here, push out, then stage 2 would resume here.